Hey, Sad Nation, what's going on? Good evening to you all. I hope you all had a wonderful day today. I want to come at you with a market recap for today, August 10th, 2023. This is for educational purposes, not financial advice. Just want to show you what happened today that allowed me to make over $12,000 in the market. First, I want you to look at the screen, and what you're seeing on there is SPY on the 5 minute time frame. The indicators I have is the 50-day and 200-day moving average, which is this teal line and yellow line. And on top of that, I have Saturday's pivot ribbon, or EMA cloud as I call it, which is these color gradients inside the price action. These are essentially the same thing as the 8 and 9 EMA, 21 EMA, and 34 EMA. Now, with that said, let me show you something else on your screen. And what I want you to take away from this is that this is something that I give out to the community who follows me on Twitter every single day, right? So let's just kind of look at this first so that we can digest this together, right? So again, follow me on Twitter, follow me on YouTube. That's where I put all my contents. So when I say data came out, I'm talking about CPI, right? Data came out lower than expected, which is good. Market reacted positively initially, but I did say be cautious. I'm like, sometimes good news isn't always reacted positively by the market. And I've left a big audio talking about that today, and I've tweeted numerous times, not just in today, but whenever we have econ data, just letting people know that just because whatever is printed, meaning economic data, doesn't always mean that the market is going to react as we would expect it to. So, just a word of caution, and just that way, that people are not caught off guard. And then I gave you my pivot zones for SPY. Right here's the TS top side, intraday, and DS downside. Right, so you can see where they're at. Right, and I'm gonna go throughout the charts later, so you see the numbers. I also said a gap was created during future sessions on ES last night, but then it was also filled and by the pre-market data or economic data. It was filled here. You can see that here. I can zoom in a little bit for you. It was filled and then rejected and rocketed back up. And then I said, currently SPY is sitting in the wedge again and about to break out. I said, watch for bulls to push up in the morning to the weekly 50% and the TS pivot. Failure to continue and back down into the wedge, and then then next would be the monthly 50% and eventually the intraday pivot. I said the lowest I can see this going right now, based on what the data is showing me, is the DS pivot. All right, now with that said, I'm going to delete this and show you all that, right? You know what? I might keep that on just so you have a frame of reference. I'll just keep it on the side somewhere so you can see it. All right. So when I tweeted this out, this was at 9:03 a.m. U.S. Eastern Time, which was probably right around here, right? So we were right at this wedge. We're about to break out. So right here, this is where we were. So and then all these other lines you see here is nothing different. Let me see if I can make it a little bit easier to see by taking some stuff off, right? We can ignore. This is the inverse head and shoulders arrow. So this is that falling wedge that we've been having, right? We drew it out from Monday, or actually last week, and this was the pattern we're talking about, like lower lows and lower highs, right? So we were in a bearish market structure. We also broke out of the rising wedge on a larger time frame. That's the daily one that we showed you, right? These are what these white lines are. Okay. With that said, this is the rising wedge. We were close to breaking out when I tweeted this at 9:03, right? We had two different rising wedges, right? And depending on how you draw lines. So we had one that we're about to break out, and we had another one up here, which all has relevance in my opinion. With that said, we knew that the data was good, so the bulls react to it positively, right? So we tapped this, and then we failed and rejected, but then we bounced off the 50% of the month. And at open, we utilized this as our catalyst to go up. So I told you the bulls were going to push up, right? Either to the weekly 50%, which is up here, or to the TS pivot. A couple of things you could have noted, right? One, why would we have taken this trade? One was the economic data was positive, market reaction was good to it initially. And then two, we just really couldn't break this 50% on the month, right? And the gap that was created by futures had enough orders sitting here just to reject that push down by the bears in the morning, right? So on top of that, we had a bullish EMA cloud, so it was bullish at the current moment before open. We also had a bullish engulfing outside bar candle, right? This is the 5 minutes, so therefore we didn't have to get in on this, right? You didn't have to get in on this, didn't break. You could have gotten in after this, the break here, right? This was the break outside the initial wedge, and now we are riding the clouds. So we had a bullish engulfing, we had support from the 50% of the month. We had good economic data. And now we are just going to play the breakout, pull back right here, right? This was the entrance, right? This is when I tweeted out saying, hey, we can go long and we can go up to pretty much the TS pivot, right? I gave you targets. And from here, I showed you that the 451s were around 50 cents and they got all up to $1.49, I believe, or maybe $1.50. So essentially 200%, right? Just from here. If you took it from open somewhere open, you would have made about 500% off of a SPY 0DT contract. So that was your first play, right? You saw that we broke out of the wedge. We also broke above yesterday's high. We also broke above the daily 8 and 9 EMA. Clouds are bullish, and then we have a bullish engulfing outside bar, 3 candle. On top of that, we had an inside bar here, right? You can see this inside bar. So if you didn't get in at open, you didn't get in on this candle with 935, you didn't get in 940, you could have took the 950, right? After the fact that we could not go below the 8-9 EMA on the daily time frame, when we broke above this, which was around 449.96, you could have taken that, put your stop at the low at 449.3, and aim for this TS pivot, which was what we're doing. That was the first trade. Okay, I just named a couple of things, right? And then you can see the volume was good. That was the first trade that you could have made, and a lot of people did, and that's what we took. The other trade was the reversal, right? We can see that we were aiming for the TS pivot, and we hit that. Now we could not continue up to the 50% on the weekly. We also had this other downward trend line that we were going to work against. So we had two things that we were looking at on the top side that we had to be conscious of if we were to continue further. This right here, this consolidation, this basing is when we knew that we were no longer going to be going up. One, because we hit a pivot zone and we hit something called exhaustion, right? Could no longer continue up. And here's your inverted hammer. Buyers pushed it up, sellers pushed it back down. And now we're starting to have indecision candles, right? Doji, swing tops, a red inverted hammer, right? Again, those are just some signs. We are also overextended on the 5 minutes. You can see the clouds were at that time roughly around 450.55 or 450.6. Price was around 451. So almost a full 70 cents to a dollar, depending on where we were at. That's on the 5 minute time frame, right? Now, if we go to 10 minutes, you can see really overextended, right? Even more extended. Clouds at that time around 450, and price was at 451, so full dollar. 15 minutes, same thing, even more overextended. You can see that we didn't. That's why we came back down. So this is at 449.6, so almost a full dollar and a half away. Things to take a note of, like I said, 5 minute had inverted hammer, 10 minutes a little bit inverted hammer as well. 15 minutes showed a, we can say a doji, still more of a hammer, or more of a bearish doji in my opinion. And then same with 30 minutes, right? Overextended as well. And the 30 minutes had a spinning top or a doji, right? And what that means in terms of traditional historical candlestick patterns is that a potential shift in price is coming, right? Because what we had was an upward movement. Eventually, once we start doing that doji or spinning top, it just means that it's neutral. That means that whoever was in charge of that momentum at the time is starting to lose it, and potentially the other side might be coming in. So that was kind of an indicator. If you did get in here, anywhere here, you could have put your stops at multiple places. 1, stop at the high day. 2, at somewhere around this trend line, or 3, at the weekly 50% mark. And you can see that the weekly 50% mark is at 452.22. The high of the day was around 451.7. So about 50 cents stop. But when we talked about our plan, we said that if it fails to push through the TS pivot, you're going to aim back for the monthly 50% again, and then eventually the intraday pivot, which is right here. So the monthly 50% is sitting at 448.25. That is essentially from 451, almost a $3 move, right? So you're looking for a $3 move to the downside with a stop at 50 cents. So it's a pretty good reward to risk ratio, right? A lot of people don't like to see that and do that because on your options, 0DT, that would still be a pretty decent hit on your premiums, right? You're still looking at probably 20 to 25% hit on your premiums. And depending on how big of a size you took, that could be a big impact psychologically on your money. So that's why it's a little bit hard, and that's what people tend not to get into. And that's why they tend not to be able to see this trade because they're unwilling to give up 10, 20, 30% in order to gain potentially. This play down here was about 3 to 500%, even more. It was probably 1,000% if you took it all the way down. So those are some of the reasons why we listed, right? We ran into exhaustion. We had the indecision candles. We had the inverted hammers. We also failed to break out of the TS pivot, right? And if you didn't take it anywhere here in this cluster from 10 o'clock to about 10:30, well, if you draw trend lines, you can see this, right? Let's just say you didn't get any of this move because you were unsure whether it was going to bounce or not. We did have this upward trend that we drew. And then once we broke out of it, we wait for the traditional pullback and retest, and it fails, come back down, right? So at 10:55, we pull back. You could have taken that right there. This would have been confirmation right here because we broke out, we had an inside bar, broke up, failed to go back into the wedge, and it came back down. A couple of things to know about this candle pattern right here, right, on the 5-minute, is that it's a inverted hammer or a gravestone doji. So that just shows that sellers are in control. It rejected pretty much off. You can see, I don't know if I can scroll in a little bit more. Right here, look at this. It literally rejected off the 21 and 8 EMA beautifully, right? So that was your other confirmation. And this was our failed 2 up, right? It was 2 down, 1 inside, 2 up, failed, came back down, right? Could not go against the trend line. So therefore, we could have waited and taken the entry here, right? Once it broke this low, we at 449.52, could have taken that. And look, even this candle itself was almost it's almost a full dollar move, right? A full $1 move on SPY. That would have netted you out a good amount. The other thing to note is that, look, once we broke out of this is the 8 and 9 EMA on the daily. It came back, could not break above it. And this was also right here is the 34 EMA on the 5-minute, could not break above it, right? And then we continue to trend down. So you could have just taken a scalp for this on this candle alone or even down here. And if you didn't get in again, same here, right? We could have gotten in somewhere around here again, right? There was just a lot of entries that you could have taken, right? Once we broke below the daily yesterday's high, we could have gotten back in after we came back down. And also you can see that the cloud started to fold, right? The 8 crossed the 21 and 34. It started turning bearish and then became bearish, right? And then the other great trade would have been right after we broke down and took in the latest low. And I called this out for you. I said, hey, by the end of the day, somewhere in the day, we'll get a break yesterday's low. Let's just say you missed the first trade up. You didn't get this trade down over here. You didn't get the third trade on the break of the rising wedge, rising wedge or upward trend line, if you want to call it that. And then let's just say you just even play this because you like, most people are afraid of playing the trend. They like to play reversal. And they're afraid like, anytime they like, this could reverse, right? So let's just say you didn't take any of these trades until, about almost 2 o'clock, right? Well, here's what I said before, is that when we hit a certain key level, which was yesterday's low, keep in mind, we came down, yesterday's low is 444.96. Today's high was 451.7, right? So that is essentially a let's see, almost yeah, 7 point move on SPY. That's huge on SPY. SPY's DTR slash ATR is not 7 points. It's roughly around 5.5 points, meaning that on a normal given good day, SPY moves about 5 points. Today we had economic data, we had a catalyst and whatnot, so therefore we moved a little more. But the point is, what you should take a note is that we run into exhaustion and we hit a key level, right? And this is also the gap. You can see that this was the gap, right? Gap 442, 442.97 through 446.26, right? We came in at what? 444.7. So we came into the gap. We came in the gap and we rejected off it. So here's a point. We're also overextended, that you just can't see it. Overextended by a little bit on the 5 minute. The other thing I want to note is this: because we ran into exhaustion, we hit the low. Once you knew there was order stacked here, because there people were waiting to get filled at the daily low. On top of that, we had a inside bar. Right, here's the inside bar. This is your 2 down, inside bar, and then 2 up. So you could have taken at the break of this candle, which is 445.42, set your stop either at the low of the inside bar or at the low of day. And then you're obviously targeting, this imbalance here or this liquidity up here. Again, that would have been a great move up, right? Look at this. So anywhere from $1 to $1.50 to $2 move. Again, the reason why this would have been great trades because you knew that after this was exhausted, right? It was exhausted. We hit the gap, we hit the low, we had an inside bar. It was just, a given that we were going to at least make some kind of pullback because we did nothing but trend down. Could we continue further down? Sure, we could have. But like I said, gaps are resting orders and balances waiting to be filled. So this could have been your other trade, and then you could have taken it up to wherever you would have felt comfortable, right? The first 5 minute candle was already a from 445.43 to 446.18. So that was a good, a good 60 to 70 cents move. So it's just kind of looking at these things, people. I know that a lot of the time it's hard to see this, and it's hard to take these trades because you don't want to risk anything, right? You don't want to say, hey, I'm getting here and then pulls back a little bit, and then you're like, oh well, this is a big stop, right? From 40-cent stop for maybe a 70 cents gain or 80 cents gain, depending on. I mean, if you would have got to this candle, then it would have been over $1 gain. So it's just gonna take time for you all to kind of get used to it, trading and being willing to risk some of your money in order to gain a lot of money. And then another trade you could have taken is you see that I drew this upward trend line again, right? So we broke it. You could have taken the trade. And again, the reason why is we were taking the trade is, look, we had this intraday pivot and we failed to break above it again. Not that I would particularly like it just because it's near the end of the day and whatnot, but it's just kind of looking at things like this where people start trading it whatever fits their particular style, right? You could have taken this trade as well. I've seen people draw this out, right? You didn't get it on the inside. You could have waited for this, breakout, wait for a little bit of confirmation, and then enter somewhere around here, or enter on the breakout here, right? Again, really depends on the type of trader you are. If you are a scalper, this would have been golden key because we can go down a smaller time frame and then you can see what would have happened, right? Here's a perfect example. Smaller time frame. Look, downward trend line broke out of it, came back, retest, could not break below it again. Get in here, right? That would have been, and this is also, I believe, your 34 EMA on the daily time frame. I mean, look at that. It literally hit that to the T, right? So you got in here, and then you're just taking, like I said, you would have targeted this right here because that's your high. That's a change in potential structure. If you did target that, that would have been an 86 cents move. If you would have got here to the top of this candle, $1.08, and then if you would have held through it, you eventually would have gotten $1.50. Although I would not recommend that just because 0 DTE at this time frame between 1 and 2 o'clock theta kicks in a lot, and you would have been negative at least 20, if not 30%, once you came back here. And then by the time you came back up here, you probably would have been at the same premium as you were up here, just because due to theta decay and whatnot. So again, I just wanted to show you look at things a little bit differently, look at things from multiple perspective. What I showed you tonight was just that, hey, we had a game plan, we had several variables that we were keeping in mind, right? We had our pivots, we had our highs and lows, we had our 50%, we had economic data, we had our clouds, we had our candles, we had our trend lines. We looked at different time frames, right? We saw the 5 minute, we looked at 15, 20, 30. 10, and then we looked at the 1 minute to see where it's at. So it's just kind of looking at different things, and then eventually figuring out what works for you. But as you can see, what I showed you is kind of how I analyze data constantly when I'm looking at the market. Not saying that that is what you need to do specifically, but I would say that it would be beneficial if you can start doing some of the stuff, like start thinking a little bit more as opposed to just sitting here waiting for this trend line break and then getting in because it broke out, right? I would say that if you have a little bit more confidence in your conviction, it will give you more conviction to take a trade and stay in trade and let it come to fruition. As always, guys and girls, thank you again for taking time to listen. Hopefully you found this video educational and beneficial for your purposes. Thank you. Talk to you later. Bye.